Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, everybody. Welcome back with another one of my episodes. And this week we have got quite a bit of things going on with gold finally. It finally broke 1800. It's been taking weeks and weeks, and then suddenly it just, for some reason, it's gone out of going on up mode, which is really good. Breaking the 1800 marks. And I've said before in my trend follow update, my portfolio update. So long as 1800 is broken, then we probably see quite a big movement, and yeah, we saw that on Thursday and a bit of more on Friday. But the whole thing sort of quite a roller coaster for last week for gold price. Basically, Yellen came out and chit chat about there's probably a need for basically increase in interest rate because the economy is heating up. And now scratching my head, how does economy heating up when a lot of people are still out of work? I suppose those people who are lucky enough to keep the job or be employed, yes, they will have caused some economic heating up because there's a lot of activities going on. But I think mainly it's all because also there's a limited number of restaurants and services that's open, and they have to make up their losses, and those price gone up a little bit. But also the people who need to be employed, the right people get employed or not, it's difficult to find the right person. I say that a couple of weeks ago already. Some like restaurateurs couldn't find enough staff, because some of them have already moved to something else, and do delivery and so forth. So that putting a bit of pressure on the increase of the prices, but also competition. Just basically limited amount of shops open. People come out and started to spend money, just like UK, and just a big queue everywhere. Not just because social distancing, but just also because there's a pent-up demand, so to speak. People has been, especially with the British, we've been stuck in our houses for quite some time, and we just want to come out and make use of the weather. It got a bit warm and then suddenly cold again, but it's allowed to go out, which is good, and people just basically want to go out. And we see the inflation coming out, but all those inflation is because not economics driven really. It just, I think, is a couple of things. First of all, the inflation is coming in, so everything got it more expensive. For people have to basically, all the people who open the shops and so forth have to increase the prices. Second, I said earlier, the right level of the right people who are doing the jobs are being made redundant about a year or so ago, and then found some other thing to do. Might have moved somewhere else, and it's difficult to fill those gaps very, very quickly. So there's a bit of increase in pressure on the wages and so forth as well. And of course, we also have the oil have gone up a bit as well. So and timber, for example, for housing, people, because of the moving from the city centers into rural areas, house prices gone up and so forth. And also I think overall is because, for me personally, I feel that the main driver here is lots of people going out to work. Some of them got sick. Obviously, some also passed away, unfortunately. But a lot of businesses are unable to survive over that 12, 18, 15 months of lockdown. And they basically just could never continue. So they're basically, for example, for food, less people going out to actually farm the land, take the food back from harvest the food, so to speak, and then distribute it around. They just basically, there's demand there, but only a limited number of businesses survived the lockdown, so to speak, and still got enough money to get people actually work on it. And it just causes loads of problem, and therefore, because there's more demand, there's not enough supply. So what happened? Simply, you get increased inflation. And secondly, we also seen this basically play out in semiconductors level, okay? Which is fair enough, like also in airplane as well. Because of the downturn, not many people buying cars because people stay at home. Therefore, the car manufacturer or the less computer chips, so to speak, or less metals and so forth, because they don't foresee big demand for the cars for foreseeable for quite some time. So they start laying off people and so forth. So when they start ramp up their STEM stuff, then the supply chain is not just let's say UK based car company. Don't just get everything from UK. You get from Europe, from China, Southeast Asia. Because you're a big ramp down, other supply chain will obviously ramp down as well. They can just kind of ramp up on demand, and that causes issue. And so there's in this case it's microprocessor chips, which affect not just cars, I believe. Also affect computers, laptops, mobile phones, and so forth. And that's another thing, the culture that we have been with the globalizations, and especially with a very slick of supply chain. Apple is famous, especially James Cook is famous to driving down inventory. So it's more like when you need it, then you order, and then the material whatever you need, more or less there within couple of days, some a couple of weeks. Steve Cook has been good at driving inventory down to like 7 days, because you got a good, very slick, very fast, efficient supply chain. But if the supply chain stops, then everything else sort of stopped. And then when you restart it, there will be not enough supply going on, and there's lots of demand, and therefore prices are going up. And same thing for airliner. A lot of airlines have to ground their flight, sack a lot of crews. And when they open up again, when the lockdown easing, because the company haven't got much money left, have to survive and so forth. So they have less fleet, less airplane available. Therefore, less staff is available. And then they also have the algorithm kicks in, and everybody wants to go to holiday and so forth. So there's a big demand there. So the prices surge quite a bit, and that causes inflation. So food inflation, car inflation, metal inflation, all sort of things inflation, and also of course houses. Timber I talked about last week. It gone up like 300%, and that last week I was talking about 15,000 or something. Now it's like 16, 17,000 within a week. So timber prices, which is something that I'm not tracking, but it's something that trend followers do, and it's gone up quite significant in cost. That causes the basic cost of building a house more expensive. And again, mortgage is something that we pay. The first thing more or less. We have to pay for. If there's like increase in house prices, therefore bigger mortgages, and that's causing inflation as well. But the other thing also, obviously, the metal side of things, everything else have gone up. Everything have essentially, because it's in also in US dollars term, the US government been printing out so much money, and of course there is going to be inflation, import inflation, because US dollar is weakening and so forth. So this has been like a big bag of informations, and we have been all seeing a lot of inflationary pressures coming out from other metals and other stuff. But gold, for some reason, just keep on, have been below 1800, even though we have done some sort of recovery since the April, end of March time, and create a double bottom. And but overall, if you look at it from last year, gold has been come down from 2070 area in August, September time, and then come down to just late March, early April to what you call 1650, 1670 area. And that's like whole 5 to 6 months, or more or less like almost 8 months of downward pressure for price, to actually go down. And once you just wonder, when everything else seems to have gone up, why gold supposed to be inflationary bet, hedge, and for some reason keep on going down. And it probably people have heard a lot about it's been like gold and silver has been manipulated and keep the price pressure down. And if that's the truth, gold probably have to do quite a bit of catch up, which I think the inflation things is definitely out of the bag, and I think we're more to see, but not necessarily what Janet Yellen is talking about, but it's more like a number of things that causes lots of inflation is coming into in America, around the world. And that's why Jerome Powell, like about 2 months or so ago, said U.S. Fed is not going to do anything even if the inflation is up like 2% or above more than 2%, because it basically the economy couldn't do anything because it's still recovering, and he have no room for actually increasing interest rate, and he probably, being a Federal Reserve chairman, probably seen quite a bit of a statistics and data that's saying coming months and maybe a year or so have lots of inflationary pressure coming up. That's why he shifted the goalpost, so to speak. So this is also very funny against oil price last year, when oil actually, remember, gone down to negative. Why is it? Because CME, Chicago Mercantile Exchange, have changed its route. So from a commodity being on the future in future market could never go negative. It actually changed the route internally and kept quite quiet and allow it to go negative. And basically, the trader just push it all down. And now you don't really see a negative anymore. And that's only like a year. 15 months ago, and all those problems probably still there. People, supply's got to be stronger, and demand will be stronger, and the supply to meet the demand. But the demand is not as high as before pandemic. There's, for example, lack of international traveling and international shipments, which uses a lot of oil, crude oil, but then crude oil came back up to 65 area. Even though the economy is still very slowly recovering, very much in the doghouse as far as I'm concerned. All this, to me, anyways, just reflecting the weakness of U.S. dollars and causes imported inflation. So when Yellen's actually say, inflation is coming because the economy is getting hot, well, it's not really. Still lots of people not getting not in employment. That's in U.S. alone. What about U.K. and Europe and around the world? Asia probably recover better, but inflation definitely coming, but not necessarily is the things that what Yellen is saying. But I think she is basically becoming used as a sounding board for Jerome Powell, basically just to test the water, the market general view of what happened if the interest rate have to go up. And in my view, I think she didn't even say what I think will happen. A lot of people also say that as well. This increase in inflation is not just going to be moderate increase; it will be huge. Basically, it's like lack of supply. It will take some time for the supply to establish itself. And also because the U.S. dollar has been overprinted by overprinting press by the U.S. government. And when you talk about trillions and trillions in here, it's going to be cost quite a bit of money. And cause quite a bit of weakness in the U.S. dollars. Now, there's been talks about U.S. dollar weakness for years and years, and nothing actually happened. But last time, because China was still friendly with U.S., so to speak, and but now this time we got Donald Trump, it causes quite a bit of stir within the Chinese and U.S. relations, and China is not going to just buy whatever because to help America out anymore. So they print more U.S. dollars, and China probably buy less of U.S. dollar stuff anyway because they want the internal consumption, because there's so much restrictions sending things across from China to U.S. because of the trade barrier. Same thing put it back on the China side as well. So a lot of difficulties for U.S. exports to go into China as well because of the trade war, the tax issue, trade barrier and so forth. So it causing more issue. And that this just all playing in the hand. So who is going to buy more U.S. dollars? Apart from U.S. Fed, Japan maybe, Europe maybe. But then with it's very strange things that are happening with Joe Biden not actually easing a lot of Donald Trump's policies and so forth, and it just not really helping this trade dispute between U.S. and China, and as far as I'm concerned, this all contribute to the inflation, and now inflation is sort of showing up, could be quite dramatic as far as I'm concerned, and gold price is supposed to show it up. Overall, I think all this combination is will help gold price, but I think that the other main thing is the last 6 or 8 months the gold price has been decreasing. I think not much people actually talk about why it's actually decreasing. Who's on the other side? Every time when the price go down, somebody's buying it. Who is actually buying it? Most likely the central bank in Asia, Russia, Europe, and they're buying all up. And now suddenly, for no apparent reason, when everybody knows there's inflation in other metals and and lumber and kind of thing. Gold still kept down, and so is silver. But now suddenly last week, Thursday I believe, just suddenly shoot up, and then Friday continue a bit. Even that's after Yellen have just say his piece. The price of gold, I think Tuesday went down to like $20, but it recovered to maybe less than $10 decrease after his her chit chat. And then the next day, the gold price just continue recover, go very close to it. I think about 1790, 1785 area, and then boom, up Django Thursday, about $20-30 increase, and Friday a bit more, and I think it's close to 1845 area, but it closes on Friday 1830. So I think the good question here, on the other hand, would it be just conspiracy theory? All this depressing the price, could it be because there's some people who really want to buy gold, but obviously they want to buy a lot, but they don't want to pay very high price, and so they actually use all sort of means, it's just conspiracy theory here, to drive the price down. Now maybe now signal the price as whatever these big players have bought enough, or more or less their planned purchase is fulfilled, then therefore it's allowed the price and it just jump up. Therefore there's just like very, very less, much less selling pressure for some reason. This is what we call the manipulation. But if you look at big companies, when they buy, let's say, a lot of shares in particular, let's say in another company and so forth, they don't want to pay huge price. They want to pay lower, as low as price possible. For example, let's say you want to buy a commodity that you really want. Okay, let's say you have a party, you want to buy 1,000 oranges. You just go and shop and buy 1,000 oranges, and in your area, you drive up the price. But you got one thing in your strive, which is in your favor, because you're planning this party, but not like tomorrow. You're planning in 6 months' time. So what you try to do is, you buy on the dip, and every time when you buy on the dip, you might try to, if you got means, and basically, send out some rumors, for example, causes the price of orange gone down or something. You can drive down the price, when you can buy some more at a much, much lower price. And then when you've got enough, then obviously you don't care about it anymore, and end up selling or want to buy low pressure is gone, and basically all these rumors mills and try to drive down the price of finish, and it's vanished because you already filled up your booty, so to speak, for all the oranges that you want. And this is being played out quite a lot. That's why I understand what I read, what I research is like big company, big player who want to accumulate certain company share price or whatever assets or something. They don't want to pay big money, because they know the demand is going to drive the price up. So what it will do, with muck around with some other media or whatever, market maker or something, to come up with loads of funny news, and we drive down or depress the price of the commodity they want to buy, and then they just basically pick it up, buy those prices, everybody dumping it, especially retail investor, and then we got enough to allow the price to recover, and then but lots of people already, especially the retail investor, dump the price, and then they all see the price just gone up. This happens all the time. It's all going back to my central theme. One of my central theme is, for many people do almost anything, so I wouldn't be surprised if you might say it's conspiracy theory, but I think there is a good case that the downward pressure, the selling pressure, or somebody trying to fill up their booty on gold, have bought quite a lot and more or less fulfilled it, and they basically allowed the price to go above 1,800. So now we just have to wait and see what happens now when the price sort of come back down a bit again. It's been quite a frenzy last couple of days, but I think overall, so long as 1790 and 1800, 1790 not broken, this should become a ceiling, because it took such a long time for gold to break it back up again. And remember the last time when it was around that level, 1800, 1900 areas, back in December, November last year, and then also tested in February on the upside. It was a support, but then it broken down in February, early March kind of thing, and has been stuck there ever since. Now it's gone back up again, so I think it will become a resistance, like a support again, and help the price of gold try to move up. So we have to wait and see what happens. So basically, that's more or less what's happening last week. Of course, the Dow Jones have gone up quite a bit as well, and so forth. So, but even though it is at the same time when the U.S. dollar index actually gone down. So when U.S. dollar index gone down, you prefer the gold price gone up as well. So this is what is actually happening. But all these things is helping one way or another. I think the gold price could move up, but I think there's a lot more to go as far as I'm concerned. This is only a beginning, and but as far as I'm concerned, also as I'm a trend follower, no matter how much other research is sort of showing or indication showing that there's so much more legs to move up yet for gold, well, I will have to stick with my system and see how it goes. But the system seems to telling me to get in short term anyway. And we just have to wait and see how things are. I think for this week as well, the medium-term tidal system also turned green, basically for gold on gold price. So I think there's also things to go to look into, and just something that I think you guys need to watch out for. But the other thing is, while everybody talk about gold, don't forget about anything that is rated in US dollars, because if my thesis is correct, the US currency weakening, I don't know how weak it will get, and inflation coming and so forth. So anything rated against US dollar will weaken as well. So other prices, for example, not just gold and silver, but like I said before, crude oil, anything rated against US dollars will go up. And crude oil is the other thing that I think people should watch out for as well. And the more everybody's talking about gold and metals and inflation, but I think crude oil will play into next year as well, because recovery, hopefully the vaccine, however useless it might be at the moment with so much variants running around, but I think overall human ingenuity will come up with something, and maybe later this year or next year started to be more effective vaccine and help travel, and then international traveling start to recover a bit. So I think next couple of years, so long as we have something, enough vaccines going out to help people to the vaccination, give people the the confidence to get the vaccines and then go traveling again. I think there's quite a bit of pent-up demand for international traveling, students, overseas students coming to UK or US to study, there's nothing rather than go online and so forth. But things will be different, obviously. But I think the demand, at least the initial demand, just like the shops here, going to pub, just waiting for quite some time just to get tables served, because there's so many people queuing at the same time. I think it'll be the same thing for overseas holidays, overseas traveling for a little while to come. But probably later in the year when people, like I said, have the confidence, but so forth. It's better to watch out for crude oil as well. Anyway, enough of my rambling for this week, and let's have a look at what's happening past week on my trend following portfolio. Okay, first off the bat, obviously, is Apple. And this week, now, short term is changed to a sell now. Medium's neutral, long term is still buy. So, NASDAQ basically not really catching up much of like Dow Jones does. And Apple, obviously, is one of the technology companies coming down a bit. So, it's facing the pressure. And also next is Amazon. Same thing. Short term is sell, medium term is neutral, long term is a buy. I think overall what's actually happening, I think, is for me anyway, Apple is too expensive in my view in general, because of the product is very high end, and with lots of people around the world is either one way or another affected by COVID-19. Some of them don't have jobs. So people who have money will continue to buy. If they like Apple, they continue to buy. But majority of other people will not be, changing the handset or buying, Apple product. Maybe there's probably a good second-hand market for Apple stuff, and therefore, able to, people will buy those, buy reconditioned one rather than buying brand new one, and this affect, Apple service income as far as I'm concerned, and especially the spread. One thing I'm always worried about. American companies selling into China is intensification between the spat between U.S. and China. It just gonna causes Chinese people or people like over there buying things who just not buying Apple or American stuff will stop. It now affect everything, from computers to handset to all sort of things, or even go to international traveling and studying. And that hasn't come to yet, but there's spat going around, so just be careful on that. As far as I'm concerned, Apple is one of the big major component that can get hit, just like Tesla as well. So watch out on those. Obviously, Amazon, on the other hand, is international delivery, buying, selling things, but basically selling things on the internet. But for me, as far as I'm concerned, people will start going to shops now as the lockdown is down. Amazon's still cheaper in a lot of cases, but people probably want to, like, for example, buying clothes. Personally, I prefer to go to a shop. Okay, if things I like it and fit me, then I buy. Amazon, you can get all the measurement before and look at the pictures and maybe some videos, but it just lack this human interaction. Try things on, and then also returning things could be. Amazon is one of the better one. When you return things, they don't moan much. The process is relatively quite good, but then all this the lack of human interaction, I think people will slowly going back out to shop to buy things. But Amazon will still be there and doing also amazing things. But I think short term wise, is basically negative at the moment. And of course, for Amazon, for the medium term is neutral, which is slightly different from last week, and also a long term still a buy. So Amazon is there, but just watch out for short term volatility. Next is Australian dollars against US dollars. Short term is a buy, medium term is neutral, long term is a buy. So this is same as last week. I think overall US dollar index continue weaken. We see I think for US dollars, Australian dollar against US dollar, it's gone up to 0.78 last week, because basically the US dollar index have gone down to 90.20 or something at the moment. So the recovery, it seems to be of the US dollars have weakened a bit. So let's see what happens if we can hold 90. If it could hold 90, then the obviously Australian dollar is what's going. Other things still have some way to sideways trade or something. But if the 90 mark, US dollar 90 mark is broken, then all this foreign exchange, anything rated in US dollar will just increase. So just wait and see. Next is Brent crude. Short term is a buy, medium term is neutral, long term is a buy. Same thing for WTI crude oil. Short term is a buy, medium term is neutral, long term is a buy. So like I said earlier, start of the podcast also, I believe anything rated in US dollars will increase in prices. So crude oil is something going to be to be there. It have make a major recovery last year. Remember WTI, I believe was minus 37. Some people talk about minus $100 per barrel kind of thing. But it recovered, and it's gone to the 65, $70 area. We just have to wait and see how much more it will recover. But judging by what happened to 2008 and 9, when the supply market and the whole economy tanked, but then the Brent could have gone up to later on 140 or something in back in old days, and that's quite a significant increase. While after things have gone bananas before, so this is the type of things that we might have to watch out, because that's definitely causes inflation. I mean, I think it's back in 2010, 2011 when the price got above $100. So would it happen again this time around? No one knows, but if the inflation is coming, well, definitely crude oil gets more expensive, so watch out. Next is DAX. Short term is a buy. Medium term is neutral, long term is a buy. So slightly different for DAX, and have moved from sell short term to a buy this week. But I think that on Monday or Tuesday there was quite a big increase of DAX, and that causes the change difference. But also on the medium term, the S2, the tariff system, have made quite a bit of money, but it's also closed out a trade. It took, like, for example, on this one, 39 days, which I've said many previously before in my podcast. Trend following is long time by nature is not day trading, and if you cut trends, you're talking about weeks and months, sometimes could be years if you're lucky, and that's how trend is. That's those major trend. That's how trend following make the money, not just 1 or 2 days fluctuation or within 10 minutes or a couple of hours. It's the long term thing, and the big money is also from long term. Just remember, Dow Jones back 2009 or something started recovery, and only stopped when Donald Trump sort of around Donald Trump election time last time. And it took like 10-12 years to actually increase, and Dow Jones actually follow it with it, the expansion of US economy, and that is years. Yeah, so if you trade only daily, maybe weekly, and then move in and out, you may see a lot of big trend. Big trend takes a long time to set up, and also take a long time to play it out. And that's why I like trend following, because for me anyway, I like to play with a big long-term trend, not just because of the money, but also because it takes less of my time because I'm just too busy. So as far as trend following is good for people with a busy lifestyle. I've said it before, and I always will say it again in the future as well. That's just how it is. And next is FTSE 100 in UK. Short term is a buy. Change from last week was sell to buy. Medium term is buy. Long term is a buy. So for FTSE, it's more like going sideways, go up and down a bit. Of course, we have a local council election on Friday, and we just have to wait and see how things are. Will Scottish Parliament get the fall from the UK or something? I don't know. But there's a lot of ifs going on. Let's see how things go on Monday. We got the full result. Next is gold. Short term is a buy. Medium term is also a buy. And the long term is neutral at the moment. So like I said earlier, gold seems to have done some recovery, which is relatively good so far. It's quite a few things that happens. You have a downward trend, which I have said before, and there seems to be two different type of downward trend within a trend channel, downward trend channel. The smaller one seems to have broken through, and also obviously the double bottom in end of March, early April time. That's a good signal, and also now recently, of course, from April to now, and suddenly there's an uptrend and it's continued to go up. And the next stop, I think, is where the 200-day moving average is, which is around 80, 50, 80, 60 area. We didn't reach down on Friday, but I think it won't be too long. We're going to challenge that. I don't believe he'll break in right away. Probably take a couple of weeks running around, but I think longer term wise, we're still looking at breaking above. However, being a trend follower, things might turn on its dime. You never know. If you're having difficulties break and stay above 200 moving average, then that would definitely be a big negative for gold. But who knows at the moment? So far, inflation's all coming out with all sort of other metals and stuff. So I think gold and silver mainly just playing catch up, and this catch up could be quite significant. We just have to wait and see. So don't leave your eyes, watch out on gold. Okay. Next is Hang Seng Index in Hong Kong. Short term is sell from buy last week. Medium long term still neutral. So Hang Seng is sort of like a indirect play to China, but obviously it fluctuates quite a bit at the moment. It's going to be sideways trade, and we just have to see how things go with that short term. So remember, short term is a sell, medium long term is still neutral for Hong Kong index. Next is Nasdaq. Short term is sell. Last week it was a buy, so this week is a sell. So it just obviously changes side, like Apple and Amazon. And medium term is neutral, and long term is a buy now. Nikkei, short term now changed to buy from sell last week, and then neutral for long term, neutral for medium term as well. Nikkei last year was sort of a leading indicator of how things might turn out, and will it be a leading indicator this time around? At the moment, it seems to be fluctuating. But Dow Jones seems to have gone up to make a new high last week, so we'll just wait and see what happens. Next is silver. Short term is a buy, medium and neutral, long term is a buy. So first, similar to gold, is essential. I think silver, on the other hand, the chart pattern anyway looks better. But as far as I'm concerned, China still needs some indication. But from the trend following system, it looks like silver seems to be a better bet at the moment, because the long term is a buy at the moment. Short term is also buy. Medium term is neutral. Probably will turn very soon. So we just wait and see for these two metals. Next is US dollar against Chinese yuan. Short term, medium term, long term also sell. That means what? US dollar is weaker than the Chinese dollar, and Chinese dollar basically costs less than buying US dollar, so that was coming down. And so that is basically saying the Chinese dollar is strengthening, US dollar is weakening on that sense. I think there are probably more legs to it, especially however you like this or dislike the geopolitics going around between China and US. No matter how much US gonna do, China is just, I think, the next nuclear on the block. It's just the demographic, just like India, like I said before, just the people. I mean, most of them, let's say everybody at the same time go to buy a car. How much of that demand is it? Everybody go buy a phone. What's the demand in there? And everybody go and go have a baby. What happened then? And also when they all go to international school and so forth, what happened to international traveling and demand for overseas educations and so forth? It's just basically the numbers. About 3-4 times the size of US, and everybody on the docks want to sell things to China. So Chinese dollar strengthen is it's going to happen either sooner or later against whatever currency it is. In this case, it's against US dollar. But I think there's still a lot more room to play with the Chinese dollar, Chinese economy, or Chinese the market in general. So just watch out for the Chinese dollar, in my view. Next is US dollar against Japanese yen. Short term is a buy, medium and long term is neutral. That means the Japanese yen is weaker than US dollar at the moment. As far as I'm concerned, we just have to wait and see. The Japanese yen has strengthened a little last week because US dollar index have gone down, and we just have to wait and see how things are. Next is British pounds against Japanese yen. Short term is a buy, medium term is neutral, long term is a buy. No change from last week. Next is also British pound against US dollar. Short term is a buy, medium neutral, long term now is also a buy. So the weakness in US dollars helps the British pounds a bit, as far as I'm concerned. But with obviously the local election going on, and we just have to see how things are. It's not moving much of British pound and so forth. We see how it might play out. Next is Bitcoin. Short term is a sell, medium is neutral, long term is a buy. So no change from last week. However, it has recovered somewhat. Remember, a couple of weeks ago, it's gone up to like 65,000 and gone down to below about 40,000, below 50,000. Now it's recovered. I think over the weekend it's around 58,000. So you can see how fluctuating, how volatile Bitcoin is. Will it be like falling, go and continue to recover and break to new high? Who knows? But follow your system as far as I'm concerned. And also the other trick I told you last time with Bitcoin is with volatile trading, shares or commodity, whatever, you really have to control your risk. And for me, as far as I'm concerned, to play this out, I'm using much smaller sizes and just have a fairly wider stop loss, because you can never tell. On Bitcoins you can have a stop gap with a couple of days like 10,000 or something. That's huge, and if you want to stay on your trade, you really have to take into account the volatility. And next is TLT, iShare 20 TLT ETF. Short term is a buy, medium new term is neutral, so there's no change from last week. From the 10 years and 30 years U.S. Treasury yields, is essentially just decreasing a little bit. So people have been buying the U.S. dollar bonds. This is quite odd, like I said before. The bonds is going up, and the U.S. Index is going up, apart from NASDAQ. And what does that mean? One way or another, something is wrong. Would it be the bond market is wrong? Generally, it's the stock markets are be more out of sync with bond. We just wait and see who is going to turn out to be right this time. And next is Tesla. Short term is a sell, medium is neutral, long term is also neutral. So it's gone down quite a bit with Tesla. With very different from last year when we have so much increase in share price in Tesla when more or less we're under lockdown. But Tesla was making quite a bit of money for ARKK, Kathy Woods, those kind of people who have a very strong Nasdaq technology ETF, that kind of thing, making quite a bit of money last year. But this year, they all seem to all gone sideways, and the RKK have sort of like gone down a bit compared to what happened last year. So, like I said before, things hot one year might not necessarily hot the next year as well. So this time, Tesla, I think, is taking a breather. It's going sideways, but don't take your eyes out of it yet. That if it's gone down, continuing, there is just short-term play. Going to short side. Next is Australian index. Short-term, medium, long-term is buys, just falling down. Jones is sideways, but it's moving up slowly, upward as well. So we see how things are for Australian market. Last but not least is Alibaba. Again, it seems to be not doing too well short-term. It's gone to sell now. Medium-term, neutral, long-term still sell. Continuously just getting battered by the Chinese government. The news are negative. It's not giving it time to recover, but we'll just have to wait how it goes. And this one is quite interesting because my view is I think Alibaba is a great company. It will recover. But the general market is, pushing things down. So even how much fundamentally I think Alibaba is great, but if the trend is down, you follow your trend following system, then sell it. Don't fight the trend, because while you might believe it is a great company, in my case I believe so, and if the right market is in China, it's one of the biggest market. Yes, you get a lot of stamp down from Chinese government and so forth, but because it's been quite well known, it's well used, not just in China, but also internationally buying and selling things within China, with the Alibaba, its own economy and so forth, the e-commerce system. I think it will recover. But while that is my case, my view, other people might not share the same view, and therefore the price can go down. So what should you do? Stick with what your fundamental views is, or your own biases, or listen to the price movement. So for my point of view, trend following is always my core. Doesn't matter what my biases or my fundamental analysis comes out or not. I have to follow my system because that's always for my core analysis. And in this case, I would much prefer to sell, but I will watch out Alibaba on the sideline. So when it turns, I will be jumping in right back in. But for the time being, it's a sale at the moment as far as I'm concerned. So basically, this is the update for this week, and I will talk to you next week. Happy trading and stay safe. Bye for now.